I know you've been traveling around your district a lot lately, and I want to find out from you what the district is thinking about the economy these days. What are companies thinking about the economy and what they're going to do going forward?
Well, first of all, it's good to have you here. Thanks for coming down. And I would say that as I go around the 6th District, I talk to business leaders. They all pretty uniformly are pretty confident and pleased with how the economy is going right now. They know that the economy's growth is not going to be at the pace that it was last year when there was so much extra stimulus. But they're not expecting and they're not seeing a significant drop-off to suggest that the economy is going to be weaker for them. Their consumer demand remains strong, and they're pretty optimistic. Now, the one thing I would say, though, is that as you go across the district, there is variation. So if you go to the big cities, we definitely see a lot of robust growth, but there are many parts of the district where we're not seeing that same sort of robustness. Some of the smaller towns, places that are more rural, there's a lot of variation across the district. And I've been really trying to get my finger on that pulse of variation to really appreciate some of the challenges that some particular communities are having.
Well, are companies reporting higher input costs either from tariffs or because you're capacity constrained in this economy?
So they are reporting that. To date, what they're telling me is that the increases haven't been so great that they can't manage it. So they haven't been passing through most of those costs to the final product consumer. But they have expressed some concern that there are limits to how far or how long they can forbear. And we may be approaching those depending on how tariffs evolve and the negotiations.
Well, what are they saying about investment going forward? Are they going to be adding to capacity, or is it tariffs holding them back, or is it uncertainty, or is it just lack of enough demand to increase investment?
Well, there's some variation in this. Some say, we're meeting demand, we're doing fine, and so there really aren't investment opportunities. Most are telling us that there are going to be opportunities, but the uncertainty definitely has affected them. And until they're confident about what the rules of tomorrow are going to be, they're going to wait and see. And that's an important thing for us to be mindful of as my team goes around and tries to understand what's going to happen moving forward. And then there are a whole host of others who are trying to figure out what opportunities might be there, trying to incorporate new technologies to increase the productivity of their workers. And that's happening over a much longer arc. And so a lot of the resolution of that will just take time to play out.
What about consumers? Earnings have been growing above 3% now, which has sort of been a rough target for the Fed. Do they notice that? And do you think we're going to see a ramp up in consumer spending, or are people kind of sated with everything they bought?
So that's a very good question. Consumer spending has been strong and it's been robust for quite some time. And I've not really heard or seen any signs to suggest that that's going to fall off considerably. Now, certainly, I'm also not seeing signs that it's going to go ramp up. So I'm not expecting to see a big acceleration in consumer spending, but I'm not seeing anything that would suggest that we're going to see any weakness or weakening in the months to come.
Well, when you put it together, the businesses and the consumers in your district, do you get an impression that we're late cycle, mid cycle? Where are we?
So I don't actually even like to talk about it like that. The economy is operating the way that it's operating. And it's really operating in a sustained way. The growth is robust, and it is something that looks like it can go on for quite some time. For me, I think about the cycle, if you want to talk about it, in the context of risk-taking. And are we starting to see signs that businesses and consumers are taking more risks than they might have otherwise, and starting to take risks that some might consider to be imprudent? When you start to see those kind of risks, that to me is the equivalent of this late cycle that you would talk about. And I'm really not seeing that. Businesses are being pretty prudent. The debt that consumers are taking on is happening mainly at the higher credit quality levels among households with higher credit quality. So I'm not seeing risks to suggest that we're at a tipping point where the economy should or might turn.
Well, do you think at this point the markets are then ahead of themselves and thinking that you got to do a rate move either one way or another? They're betting at the moment on rate cuts.
Yeah. Well, I am not in the position right now where I think that a move in one direction or the other is more likely. There are a lot of risks out there which, if they come to fruition, might have the economy weaken. And if that happens, then a rate cut might be appropriate. But there are also a lot of sources of uncertainty that if they're resolved in particular ways, the economy might actually get a whole lot stronger, which could suggest that we might want to do a rate hike. Right now, there is still uncertainty, right? So it's hard to say what the next move will likely be. But I am certainly not in a case where, if you ask me how the scales are, I don't feel like, for me, they're tilted more to the cut than to the hike. I think we're pretty much in balance.
Well, monetary policy works with long and variable lags, as they say. So do you think that the December rate hike was still justified? Could it be a mistake? Could the Fed be slowing the economy as the year goes on?
So I actually don't think it was a mistake. It fit in my model. I was very supportive of the cut in December. I thought that was going to be probably the last one. Then we'd have to see what happened with the economy. And when I talk about the arc of my policy, it really goes to the feedback I was getting from businesses. Early 2018, businesses were excited. They were energized. We had just had the tax reform. They saw a lot of possibilities. When I got to the middle of the year, to about September, business leaders were telling me something very different. They said, we're comfortable. We're going to move on. But there's uncertainty in 2019, and you guys might want to just hold off for a bit. And that became sort of a common theme in what I was hearing. So I listened to them, frankly, and they said, 2018, you guys are good. 2019, we think that you should look and take your time and don't be rushing to a number. And that's pretty much how we're operating. So I actually think that the policy course that we've done has been exactly on point. I think the economic performance would bear that out. We've seen growth continue above the long-term trend. And we haven't seen very much inflation as well to suggest that the economy is overheating. And so I think we're in a pretty good place.
Before we let you go, you get to travel around and talk to all these people. And I'm curious, the media live in these bubbles, of Wall Street bubble in New York, political bubble in Washington. What do people tell you about their economic decision making? How much is it affected by what happens on Wall Street in the stock market or what happens with Donald Trump?
So those are two very different issues. First, with the stock market, it's important to remember that almost half of Americans don't have a position in the stock market. Right? And so their decisions are really based on other things, what's happening in the dollar store and Walmart versus their prospects for having a job. And what we've seen over the last there's been a 10-year expansion, is growing confidence that the job they have today is going to be around tomorrow, and also growing confidence that the economy is going to continue to perform in a way that they can start to make longer plans. So I think that from an economic perspective, it's much more the general performance that is more important than the stock market per se. In terms of Washington, I hear a lot of different viewpoints on the politics of Washington. There's frustration. There are a lot of folks who feel that we should be able to get to more bipartisan positions that could really get policies that would help the economy move forward. But in general, I think that even the political landscape has not been one that has really caused people to lose faith in the economy. And I'll tell you, the president's approach is very different than his predecessor. And it's taken people a while to get comfortable with that. But in our last board meeting, one of my board members said, she feels that on some level we've adjusted and adapted, and so are less affected by the day-to-day swings and the new things that come on a regular basis.